when to buy or sell your assets. What's up, guys? Brandon Gentili here. How to know the right time to buy or sell. This is the age old debate of knowing when to buy or sell your assets and what is a good time. And I'm asked that all the time. And anyone who's in the investment space and doing this for any length of time, you're constantly asked, how do I know when to buy and sell? When should I buy or sell? And the simplest answer, we're going to dive more into this in some subsequent videos, getting on the whiteboard and talking about this. But the quick couple minute version written out here is how do we measure assets against each other? Do we know when to buy or sell? How can we tell what's undervalued and when you should be buying or selling? This is just a Trader University. Matthew Crider is one of my mentors, and he just had a great screenshot the other day of your altcoin is dying, son. And he had a great video. You can see a screenshot down here where he's measuring Bitcoin compared to all other assets. And here's the QQQ's index. So it just destroyed the last decade against Bitcoin. So these are key evaluation tools you quickly use to see where a market sits without having to dive into hours of research, even though I recommend you studying up on your investing as much as possible. And again, this is not financial advice. This is just from everything I've studied, what's produced a lot of fruits from me over the last decade of investing, and hopefully can give you an advantage over the average investor. So not financial advice, just what I see in my experiences and in what I'm doing. These ratios can also tell you how assets have performed against each other and the true validity of an asset class compared to others. And again, like I said down here, you have gold to Dow, for instance, when you measure it against each other. And you generally want things, as Mike Maloney says, you want things. We know when to buy gold is now in silver and things of actual value, and then stocks are very overvalued the higher this goes up, and we want to be buying stocks and dividend paying stocks down. This is 0.5 or 1 or 2.5 or 5, anything under 5 most likely. I know Mike's looking for probably around 1 or 2 or less, but that's how we know things are very overvalued. When you see down here 1980 that it was undervalued, stocks were undervalued, and gold and silver were overvalued. Well, here it's opposite. So we want to be looking for this to reverse. And that's how we know things are overvalued or undervalued, and know when we're getting a good deal, a good value on something. So if you do this, at the very least, again, you can get a great idea of market situations and fundamental analysis, if anything, and using some technicals and fundamentals together, using technicals to help your fundamentals, and cutting through the clutter of the media and advertisements and all the people vying for your attention. So again, we went through the QQQs and looking at Bitcoin destroying that. And again, some people would say, well, yeah, why would I get into Bitcoin then? Because look, it's destroyed over the last 10 years, so the QQQ can only go up. But again, this is nuanced. There's two facets to this. It's one, to show the validity of an asset class and showing how Bitcoin's performed and how much it's just torched the overall markets, and really every market. We're just using QQQs as because it's a well-known market indice, and it's something that people know, and it's just kind of a placeholder for the markets and that I threw up here. So and this is from Matthew's video, actually, your altcoin is dying, son. So this is, like I said, this is a way to just see what's going on in the markets, and like gold and silver, how do I know what to buy, when to buy? Down here with the gold to silver ratio, knowing when to buy gold versus when to buy silver. So when this is going up, silver is becoming more undervalued and gold is overvalued, and vice versa. When it's down here, silver is very overvalued compared to gold. So you want to be buying more gold when it's down here under 20 or 30. So I think the average, again, Mike Maloney always says, is around 40 to 60, probably something like that, 50-ish. So anything over this, we want to be buying silver compared to gold. And then you're transferring out eventually when you want that cash paying, dividend paying stock or rental real estate when these indices flip. These ratios, and again, these are quick ratios to tell you where you're at in a market. And you have things like S&P to Brent crude, and I got a lot of these from the Macro Trends website. And this is, again, showing some of the inverse effects, but then also there are correlations at times. So you have the S&P going up and Brent crude now going up. So you see the S&P coming down now as the Brent crude is going up. It makes, as oil goes up, it makes everything harder in the markets. We're seeing shortages, we're seeing inflation, we're seeing prices because of oil, and everything is run off oil and all energy. So it's making everything coming to market, coming to shelves, that much harder. So you're going to see the markets go down as oil goes up. So you want to be able to see these trends and know when to jump in to certain assets and when to jump out. and U.S. debt to U.S. GDP. So, and again, another ratio you can see. The Buffett indicator is another one, but here's another one. And again, anytime you're over about that 80-90% range here, you're really in no man's land. You're really at the point of no return. So we are way up here. You can see it's come down a little bit. Inflation. They're trying to eat away at that through inflation, but we're really at the point of no return there. So just again, you can use these ratios to show you really the numbers that will tell a story, as Robert Kiyosaki will say. And you want to see these stories play out instead of just trying to willy-nilly go into the markets. Another tactic to use when actually buying or selling in and out of the market are tranches. And buying and selling in tranches is super important. I do mine at about 20% at a time. This is where you are never totally out of position either, which is nice. You're never just going all in or going all out at one time. I learned this from Mike Maloney years ago as well. Tranche on the way in, tranche on the way out. This way you can get an average at the bottom or top, hopefully. And no one ever catches it at the bottom or the top. And if someone does, it's really only luck that happens. So this is very important to consistently measure assets against others over time to take position sizes through tranches in and on the way out as a form of diversification or dollar cost averaging. This way you can hopefully catch everything around the top or the bottom. We could go into massive detail on all these subjects, obviously, but I hope that some of these primers and just talking about some of the things will serve you guys and shortcut some of the process for you. Again, we'll dive into some of these on some whiteboards and actually looking at some things. We'll talk about price versus value and how the financial system, the U.S. financial system works and how dollars spring out of existence out of nowhere. So if you like these videos, please let me know. Thumbs up, thumbs down, comment what you would like to see, what you want us to go in more depth. We're trying a lot of different things here. That way we can, again, see what you want to see more of or less of. And we really appreciate the feedback. We appreciate the time, the energy. It's the most important thing we have. And again, if you want to see some other videos, click the links to the below to the side. If you want to see some of the other historical things we go into, regarding our investments, our portfolio that we are going to share, and also the communist takeover goals of the country, the FDR's Second Bill of Rights, the Communist Manifesto that we posted, all these different things that really are these macro shaping things over the last couple hundred years that are shaping our society and shaping the investment landscape. And if you don't know what's shaping that landscape, it's going to be very hard to invest going forward in the future. So, and then coming up, we also have a whiteboard video that we actually got the idea from JP Sears of doing the whiteboard and asking yourself, do I believe this thing's going to happen? Yes or no? And if that thing happens, or if it doesn't, it's going to lead you down a different direction. So we'll get into all that. We appreciate your time and energy. And like I said, if you like, dislike, please let us know and subscribe if you would like more content like this. We appreciate you so much, and we'll see you on the next one.